So let's talk about accelerated growth. If you were to, well, let me start with this. You're probably all hearing about gold and silver and oil and other investments that, that people are feeling more comfortable in outside of the stock market, because the stock market's been so volatile. Everybody's talking about gold and silver. Now, if you were to spend that $30,000 on gold, what would that give you? Well, it would give you some security. You'd probably be able to sleep at night knowing you have something of value. Gold has always been considered money. And if our currency just completely got wiped out, you would have money. But what if gold is very volatile? So it's not necessarily going to be growing in value. It's protecting your wealth, but not necessarily growing, and it doesn't produce income. So to me, that's the biggest loss when buying something like gold and silver, is it's not generating income for you. So I have a very close friend of mine who I actually stay with when I'm in town, in her gorgeous home, and she has millions of dollars of money just sitting in cash, and she's somebody that I would say, please put some of that in gold. Please put at least 10% of your portfolio in gold, because that paper asset could be wiped out overnight if our currency just keeps getting devalued the way it is. So for someone like her who has a lot to protect, I absolutely recommend gold and silver. For those just trying to build to that level, it may not be the way to accelerate your growth. Using leverage is a better way to get to a point where you have something that you want to protect. So, but if you did, let's say you did still say, I want the gold and the silver, so I'm going to put $30,000 into that. Let's say you did get a 10% return. You would be earning $3,000 a year on that money. But if you instead put that $30,000 on the down payment on that $150,000 house, and let's say that appreciated by 10%, then your return is $15,000 because you get it on the full $150,000. I don't think anybody here is expecting real estate to appreciate by 10%, although it is in some places already, and it will. But in the meantime, let's say all it does is 2% growth, which is far below the average. The historical average has been more like 6%, would be $7,500 a year in growth for that asset, which is double what you would get in gold or silver in the market if it also went up 10%. But if all it did was go up 2%, then you would be getting the $3,000 return that you would be getting in stocks or in another unleveraged asset.